When you look at some of the position of JPMorgan, of course, you didn't really buy any long-dated bonds. And at the time, a lot of people said, look, stop hoarding cash. Do you think regulators and investors had pushed some of these banks to take unwarranted risk?
Yes, I do, but let's be clear. The people to blame are the bank CEOs and the bank boards and things like that. Having said that, I think there's been a humility on the part of regulators that the Federal Reserve itself never forecast interest rates going up. Not one Fed governor forecasted, and whether you forecast it or not, you should be stress testing people for it. Their stress tests always had low rates. We always knew about uninsured deposits, and there were huge incentives that banks to put securities in held to maturity, lower capital requirements. Huge incentives to own treasuries, lower capital requirements, and they counted for liquidity. And I'm hoping all that gets looked at, and they should look at it and say, yeah, okay, we were a little bit part of the problem, as opposed to just pointing fingers.
So this is what, not a regulation problem, it's a supervision problem.
Yeah, it's a little bit of both. They become very related. I mean, supervisors look at, are you doing the right thing by regulations and like even the stress test. I've always thought that, when you have one stress test and you have a company completely focused on that for 3 months, does it lull people to a false sense of security that all these other things aren't going to happen? And all these other things in history always happen. And so, I think it was a little bit of a mistake to have one stress test. I'm not asking them to do many at this level of detail, but our stress test is 200,000 pages long. Do you think that last 100,000 pages added value? And my view is it did not.
Do you think things will change because of this? Is this like a catalyst?
I think it's going to get worse for banks. I think that people...
What do you mean by worse?
It's just more regulations and more rules and more requirements. I hope they do it very thoughtfully because, we love the community banks, the regional banks. We're the biggest bank to those folks. But if you overdo certain rules, requirements, regulations, some of these community banks tell me they have, more compliance people than loan officers. And so at one point you make it harder for them to do business. There are already hundreds of rules in place, and in a lot of ways it's the mix of the rules. If you're going to change liquidity, maybe not capital. If you're going to change capital, maybe not liquidity. If you're going to add TLAC, then maybe you should do something with deposit insurance. They should sit down and have a very thoughtful conversation about what those things are and what we want the outcome to be. And if you look at the present outcome, a lot of things are leaving banks. And they should. If that's what they want, so be it, but that should be done with the forethought. That should not be done because you're just putting rules and regulations in place and you don't know the consequences. The mortgage business, for example, is, largely, not largely, 80% out of banks today. And just be careful about what you wish for.